Hey guys, welcome to our channel. This is LKP Dhann ki Baat. My name is Rupak. I am Senior Technical Analyst, LKP Securities. So once again, we'll be discussing about Nifty, Bank Nifty, sectoral indices, and two stocks. So let's start with Nifty. So what we can see that Nifty remained volatile during the last week, and it found resistance at around the falling trend line on the daily chart, at around 18,150 kind of levels. But then it fell down to lower levels, and on the lower end, it has broken the rising channel, which is a negative setup. It has broken below the rising channel. That means waning bullishness in the market. So the trend is likely to remain sidebar to bearish for the near term, but overall will be in a buy and dips market as long as it is remaining above 17,400. So 17,400 is likely to act as a very crucial support. As long as Nifty is remaining above that, we can expect buying happening at the lower levels. Whereas on the higher end, 17,750, kind of level will be there to act as a resistance, above which Nifty can move up to once again to the falling trend line, which is currently pegged at 18,100 to 18,150. Once Nifty is able to give a strong and decisive breakout above 18,150, we can expect strong rally happening in the market, and then Nifty will be able to move beyond the previous peak and will be in a new lifetime high. However, on the lower end, if 17,400 is taken decisively, we can expect serious correction happening in the market. So till then, if Nifty is trading within the range of 17,800 and 17,400, will be in a sideward market. If you talk about Bank Nifty also remained volatile during the week, mainly during the first 2 days of the previous week. Like it moved above the falling trend line, but failed to sustain there and came back to the lower level. During the last 3 days of the previous week, Bank Nifty remained within a range. Like the range was 38,000 on the higher end and 37,350 on the lower end. So going forward, as long as Bank Nifty remaining within the range of 38,000 and 37,350, we are not going to see any kind of directional move in the banking space. But however, if Bank Nifty can move beyond 38,000 on the higher end, we can expect a rally happening towards 39,500 kind of levels. And banking stocks like ICICI Bank, Axis Bank, IndusInd Bank is likely to move up really high levels. Whereas on the lower end, if 37,350 is broken, then there may be some selling pressure in the banking space. On the lower end, below 350, below 37,350, the index can fall down towards 36,400 kind of levels. Even 35,000 is also expected if 37,350 is broken decisively. So the current setup is like a consolidation phase, but if it breaks above 38,000, we can expect stronger rally in the banking space. If 37,350 is broken, then you can expect a bearishness in the banking space. If you talk about sectoral indices, our first pick would be Nifty FMCG index. Why? Because Nifty FMCG index has given a trend line breakout on the daily chart, and the trend is positive right now. And though the index has moved up a bit, but then there is a room for a stronger up move in the index. If you look at the weekly chart, we can see the stock has given a downwards consolidation breakout. It consolidated from November to March 2022. Then there was a sideward consolidation, and then there was a smart consolidation breakout. And during the entire week, the index has remained above 50 EMA on the weekly time frame. That shows the resilience of the positive momentum in the space. And we have witnessed buying in the stocks like Britannia, Colgate, Dabur, Tata Consumer during the last few days. and so the momentum is likely to continue over the next few weeks to few months. And so on the higher end, the index can move up towards 39,500, even 41,000 is also possible in the index, as long as it is closing above 36,400. So on the lower end, 36,400 is going to act as very crucial support for the index, and the buying is likely to continue in the space as long as the index is holding above 36,400. Our next peak for the sectoral indices is IT, but the view is negative for the index, as the index has given a rising channel breakdown on the weekly time frame, and the pattern is looking very bearish because there is also a bearish engulfing pattern formation on the weekly chart, and we can see that index is finding strong resistance around 37,000. So as long as the index is remaining below 37,000, we can expect correction in the space, and on the lower end, 33,000, where the 50 EMA on the weekly chart is lying, and so over the short to medium term, we are bearish in IT space, and 37,000 is going to act as a very strong resistance, and our bearish view will remain intact as long as the index remains below 37,000. Our first pick for the week is Britannia Industries. So on the daily chart of Britannia Industry, we can find that the stock has moved above the falling channel. So there is a falling channel breakout on the daily chart, and after a recent consolidation of 3 days, the stock has moved up higher, and it is currently trading above the 50 EMA on the daily time frame. So the trend is clearly positive for the short term, and on the lower end, this consolidation low is going to act as support. So 3250 is going to act as support for Britannia industry. On the higher end, the stock can move up towards the recent swing high, or recent the next consolidation high, and which is peaked at 35 26 35 30 kind of levels. So a rally towards 35 30 35 20 is expected from the current level. On the lower end, 3250 is going to act as a very crucial support. As long as it is trading above 3250, the positive momentum, the positive trend is going to remain in the stock. Also, the RSI, the positive crossover in the RSI is supporting the current positive momentum. So first peak is Britannia. Our second peak is TCS. And on the daily chart of TCS, what we can see, there is a bearish engulfing pattern on the on the weekly chart. On the weekly chart of TCS, we can find a bearish engulfing pattern. So the stock is likely to fall over the near term because the pattern is bearish, and on the lower end, immediate support is placed at 34.94 kind of levels, where the 50 EMA on the weekly chart is lying, and on the higher end, the last week's high is likely to act as a crucial resistance. The immediate resistance will be there at 3850 kind of levels. So as long as the TCS price is trading below 3850, the trend will remain negative, and the stock may fall down towards the 50 EMA on the weekly chart, which is peaked at 3500. And once it falls below 3500, further correction towards the previous swing low is expected, like the previous swing low is peaked at 3385 kind of levels. So overall, bearishness may persist in the stock of TCS. We can also refer to the overall IT index, which is currently having a bearish setup after a rising channel breakdown. So our peak for the week is long in Britannia Industries and short in TCS. So that's all for this week. We'll be meeting you in the next week. Thank you for watching this video. Thank you again.